Today's U.S. market tone stayed cautious after the close. The major indexes all slipped modestly. The S&P 500 fell 0.63%, and the Nasdaq dropped 0.59%. That tells us the market is not in panic mode, but buyers are also not confident enough to push prices higher. Investors are waiting for clearer signals before taking on more risk.
The main driver today was uncertainty, amplified by Federal Reserve Chair nominee Kevin Warsh's Senate confirmation hearing. Reuters reported that Warsh told senators President Trump never asked him to promise rate cuts.
And he would remain strictly independent of the White House if confirmed, while calling for a sweeping overhaul of the Fed's inflation framework, including new data tools and less public commentary from officials on rate paths.
He also criticized Chair Jerome Powell's tenure as a fatal policy error behind post-pandemic inflation, said he would divest well over $00 million in personal assets, and argued Trump's tariffs had not fueled inflation, a view at odds with many Fed policymakers.
Republican Senator Tom Tillis said he would not advance Warsh's confirmation until the administration drops its criminal probe into Powell. With the Fed's future still in flux, that kind of headline risk is weighing on risk appetite alongside renewed U.S.-Iran tensions and ceasefire questions, sending money toward defense as indexes struggle for traction.
In the sector picture, the key word is divergence. Healthcare held up better, and United Health was the clearest example. Reuters reported that the company raised its 2026 profit outlook and beat first-quarter expectations, helping the stock jump about 10%.
In an environment without a clear macro theme, and with Fed uncertainty in the mix, the market still rewards companies that can deliver earnings certainty.
On the stock side, United Health deserves the spotlight. This was not a move driven by hype. It was driven by stronger fundamentals and a better earnings outlook. That kind of move can have more staying power than a pure narrative trade, but whether it turns into a broader trend will depend on how many more companies can deliver similar results during earnings season.
What I am watching next is simple. First, does the geopolitical risk and Fed nomination drama cool down further? Second, can large-cap earnings keep giving the market direction? For now, the message is clear: the market is stable, but still cautious. We are not in a full risk-on phase yet.
So the takeaway is not that the market has turned bearish. It is that the market is becoming more selective. If there is no new catalyst, I would expect more sideways action, with stock-by-stock moves mattering more than the index level itself.
Let us know what you are thinking. Please subscribe.